Hello, this is Ahura on June 6th, Thursday, to have a short review on ECB meeting decisions and market reactions. First of all, let's see the decisions and what central bank in Europe they decided on their meeting today for interest rate decision and monetary policy meeting that they had. As market value was expected, European Central Bank cut the rates by 25 bps for deposit rates, for lending facility and for interest rate. Sorry, and basic interest rates. All of them they cut all of them by 25 basis point as I told, as it was expected. So there was not surprise, but however even if there is not a surprise in the decisions in on their statements, they had some surprise and some positive data on the statements. Let's review the statement. As the ECB statement tells us, since September 2023, they say that the inflation has fallen by more than 2.5 percentage points, which means that after 9 months of holding their rates, they can now cut the rates by 25 bps and reduce their restrictions policies. ECB also expected inflation to average inflation for 2024 at 2.5%. They expect the average inflation next year to fall down to 2.2%, and in 2026 the average inflation should be about 1.9%. At the same time, they expect the economic growth to grow economy to GDP to grow 0.9% this year, 1.4% in 2025, and 1.6% in 2026. Overall data or overall expectations, actually, they are somehow better than previous expectations, and they are kind of more positive and more they can give more hope to investors and the traders and especially investors that if they invest in the eurozone, they invest in their stocks, and if they go through the euro, they can get more support from the economic growth, and it's kind of the positive outlook if we compare it with the outlooks and expectations that they had in the previous meetings. So based on these expectations, they decided to cut their rates by 25 basis points for all the rates, all the interest rates that they had. And about the asset purchasing program, or APP, and pandemic emergency purchase program, that PEPP that they had, they decided to end to reduce the PEPP, or pandemic emergency purchasing program, to reduce it by 7.5 billion euro per month on average in the second half of the year, and ended it at 2024, by end of 2024, to end this program. Overall, but what they say in the statement is that these decisions, they are somehow the next decisions for the next meetings and for upcoming decisions. All of them, they are depend on market condition, they are dependent on inflation, and they are dependent on economic growth. So ECB emphasizes that there is not 100% decision or outlook that what we are going to do, and there is no guarantee that if in the next meeting they also will cut the rates or will not cut the rates. So all of them depend on the market data, inflation data, economic data. So everything is flexible and everything is depend on the data and market condition. That's what they say, and they say that all the focus is to get the inflation down to 2% target of the central bank in Europe. This is what they say in statement. So let's see the chart and see how this decision affected in a chart. As we see in a chart, so Euro USD, let's go make it in it the 1 hour chart. So if we go to the 1 hour chart, we can have more data. As you see in a 1 hour chart, euro first weekend against the USD, and we saw that downtrend right after the decision. But again, now euro can gain somehow a little bit against the USD, US dollar. But this fall and increase, they are the first. We can say that the first reactions, they are emotional mostly. We have to wait for 1 or 2 hours later to see the best reaction that the market had. But generally, as the data and as the expectation, they were somehow positive, and the market expects to see the economic growth better than previous expectation and estimates. So, which that can be positive news for eurozone economy, that can support the euro against its rivals for anyhow. So when you have the positive economic outlook, it can help you generally to your economy. So since also the euro is not like a dollar that we say that, okay, if it's the economic growth is fine, so what you have the safe haven demands or not. There is no such these issues in Europe. So the euro is dependent on economic data, economic expectations. Since the economic expectations and data, they are somehow the positive and better than previous meetings, now we can expect the euro to gain somehow against their rivals. So the data, they were not, despite, don't forget that the market was expecting this 25 BPS rate cut. So it's not a surprise. Yeah, if it was surprise, and if the market was not expecting for the rate cut, and the ECB would cut the rates, then it would be the downtrend in a euro USD chart. We could see the downtrend in the euro USD chart. But as it was expected before, and it was already priced in the market, this 25 BPS rate cut, so it will not have that negative reaction, that much negative reaction in the euro. Also, even vice versa, the positive reaction can come probably because general expectation of the European Central Bank was positive, and generally economic growth and inflation expectation, they are much better than the previous estimates. That's why euro can continue its slow uptrend that it had. Let's go to the daily chart. The euro can continue its slow uptrend that it had, especially if it can hold itself above 1.087. 1.087. As long as it's above this level, about this first resistance level, uptrend can continue. The trend can change under 1.07. On the stock markets, the data, they were not that good for the stock markets, as the stock markets had no confidence that the euro can continue that ECB can continue its rate cut in the next meetings as well, because the market didn't give such a confidence that that ECB can go forward, can go through more dovish policies in the next meeting. So there is no special exclusively signed for that, which is negative for the eurozone stock markets. But as I said, since they cut already the rates, it can also be the positive, which means the euro stocks in the eurozone, the overall uptrend that we have right now can continue, but much slower. Let's see Euronext in daily chart. If we go for longer outlook, so in a daily chart, it's still above the trend line and a positive, unless it fall under 85. If the Euronext fall under 87, then 85 actually, or 87 around this, then we can say that the trend can change. But for now, the overall data or overall trend is positive, but the uptrend can slow down much more. That's the overall condition in the market reaction, data, expectations, decisions, and market reactions. If you have any other question, please write down under this video on Instagram or YouTube. I will try to get back to you as soon as possible. See you. Bye.